Imagine waking up tomorrow. Gas prices have doubled. Groceries cost even more. Flights are canceled. Stock markets are crashing. Factories thousands of miles away suddenly stop production. It sounds impossible. But all of those events can begin with one conflict: the conflict involving Iran. And although the fighting is happening in the Middle East, its economic shockwaves are being felt across every continent. Today, we'll break down how this conflict is affecting the global economy right now, and why its biggest consequences may still be ahead. This is Explaining Tomorrow, the Iran conflict. At first glance, many people wonder why conflict in Iran affects countries on the other side of the world. The answer is simple: energy. Iran sits next to the Strait of Hormuz, one of the most important shipping routes on Earth. A significant share of the world's oil and liquefied natural gas passes through this narrow waterway every day. When conflict threatens shipping in the region, investors immediately fear supply shortages. Oil prices rise. Insurance costs for cargo ships increase. Shipping companies reroute vessels, and suddenly, businesses around the globe are paying more just to move products from one country to another. The first economic impact is usually seen at the gas pump. When oil prices increase, transportation becomes more expensive. That affects nearly everything: food, electronics, construction materials, consumer goods, even online shopping. Businesses pass these higher costs to consumers through higher prices. This creates inflation. Central banks then face a difficult decision. If inflation rises too quickly, they may delay interest rate cuts or even raise rates to keep prices under control. Higher interest rates make mortgages, business loans, and car financing more expensive, slowing economic growth. Markets dislike uncertainty. Whenever geopolitical tensions increase, investors often sell riskier assets and move money into perceived safe havens, like government bonds, gold, or the US dollar. Stock markets around the world often become more volatile. Companies dependent on fuel or global shipping can see profits squeezed. Meanwhile, defense companies and some energy producers may benefit from increased government spending and higher commodity prices. This creates winners and losers across the global economy. The global economy is deeply interconnected. A factory in Germany may rely on raw materials shipped through the Middle East. An electronics manufacturer in South Korea depends on energy imports. A food producer in Africa may pay more for fertilizer because natural gas prices have risen. When one critical region experiences disruption, delays ripple through global supply chains. This can increase production costs, reduce manufacturing output, and make everyday products more expensive. Not every country experiences the same impact. Nations that import large amounts of oil tend to suffer more because higher energy prices increase inflation and widen trade deficits. Emerging economies often face additional challenges because they have fewer financial resources to absorb sudden price shocks. Countries that depend heavily on Middle Eastern energy supplies can experience slower growth, currency pressure, and rising government borrowing costs. Meanwhile, major oil exporters may benefit from higher energy prices, at least in the short term. The long-term impact depends on one question: how long does the conflict continue? If tensions ease, energy markets could stabilize, and inflationary pressure may gradually decline. But if the conflict expands, or shipping through the Strait of Hormuz faces prolonged disruption, the consequences could be much more severe. Governments may accelerate investments in renewable energy, nuclear power, domestic manufacturing, and alternative shipping routes to reduce dependence on vulnerable regions. Companies are also likely to diversify supply chains after learning how quickly geopolitical events can disrupt global trade. These changes won't happen overnight, but they could reshape the world economy for years to come. History has shown that wars are never confined to the battlefield. Their effects spread through energy markets, financial systems, supply chains, and eventually into our daily lives. The Iran conflict is a reminder that in today's interconnected world, a crisis in one region can influence prices, investment, and economic growth almost everywhere. Whether this becomes a temporary shock or a lasting transformation will depend on diplomacy, market adaptation, and how the global economy responds in the months and years ahead. If you found this breakdown helpful, consider subscribing for more in-depth analysis of the world's biggest economic and geopolitical stories. Thanks for watching.